Welcome back to the channel. I'm going to show you a very accurate way of timing pullbacks and entering in as accurately as possible. First of all, what I want you to do is just take a look at this chart for a couple of seconds. Now, what do you see? Would you enter this? Would you sell? Would you buy? Where would your stop loss be? Where would your take profit be? And just have a think, because I'm going to show you how I would do this following this model that I'm about to show you. Now, I'd like to just lead off by saying that this is a follow-on from my previous video. So the previous video is focusing on the main strategy I follow, which is the Echo model. And within the Echo model, you can then refine it further by doing what I'm about to show you. So this relies on one very simple tool called the Fibonacci Retracement, which you can find right here. So it should look something like this on yours. Yours may look a little bit different in terms of the colors and the numbers, because these aren't the default settings. Here are my settings if you want to copy them. So we have 0, we have 0.5, we have 0.618, we have 1, we have negative 0.618. The only one that's changed really is this 0.618. And what this is a take profit level. Now, we don't follow this every time, and I will show you an example of when to follow it and when to not follow it. In this situation here where we have this chart, it should be very clear to the majority of you what's happening here, or what does this typically look like? Because to me, this looks like a very normal break and retest. So what we have is price here. We've broken above this level of resistance. We're now coming back down. We've got the moving average crossed to bullish, and we could potentially see a move to the upside. So that's what I'm looking for here. But to confirm this is another layer. So we've got the bullish trend, we've got the level of structure. What I want to do is just measure this pullback. So what I want to do is find a 50% move. So if we move up, for example, 100 pips, I want to see a pullback of at least 50 pips or around 50 pips. Which you can see here, we've had this 50% move back, which is the 0.5 level. Now, if you don't know what the Fibonacci is, it's a mathematical based tool. I don't know the exact details off the top of my head, but you can go Google it if you want. It's very common. It's based off the Fibonacci spiral that's used in nature, space, all sorts of things. So it's not something that has been, it's not just invented or made up by some basement dwelling trader. It's a real, it's mathematically based. It's used on larger trading floors by large market participants, not just retail traders. So to actually trade with this, now in this situation, I would put my take profit at this first level, at the previous high. And the reason is because this is a level where we could get stuck. Now, there is definitely potential to come up to the previous highs here, which would be the extension. But because this trend isn't aggressive enough, obviously we are moving to the upside. But at the moment, overall, we're in a bit of consolidation. So I'm not looking to try and take a huge play here. I'm just looking to get in and get out and take some money off the table. And make some money. So in this situation, I'm going to go for roughly a 1-to-1. Now, there are cases where, again, you can move your take profit up to the extension. You could have a smaller stop loss. But because we have such a large amount of sort of traffic here, we've got quite a large range. I'm just going to put it at 1-to-1. And that way we have enough room for price to go down. And sort of just play around, and we're not trying to restrict ourselves. We're not being greedy. We just let the market do what it needs to do. So if we play forwards, you can see great reaction off here, and that's it. Very, very simple. Now, because this is a 1-to-1, it obviously has a higher chance to hit take profit. It's around 50-50 compared to obviously if it was a 1-to-2, 1-to-3, 1-to-4, and so on. That's very simple. So what I'll do is I will go ahead and show you another example, and yeah, I'll show you how that works. Okay, so there's a possibility right here. So if we take our fib from the high to the low, so we're looking for a potential sell here. If we marked up here, we could put our stop loss at the previous highs right here. So in this case, I'm not going to go for a stop loss all the way up here. I would be quite comfortable just letting it go there. And again, our take profit would just be at the lows. So in this case, we're looking for a 1 to 1.5. So let's see if this one works. And it doesn't. So this is the thing. So again, we didn't follow the trend. There were certain things here that we didn't really follow. This was just based off a 50% move. And this is the case with a lot of tools and indicators. You know, they could work very, very well, but you still need to have confluences. You need to understand, you know, why is the market moving, which way is the market moving, and so on. So what we're going to do again is draw it from the low to the high because we're looking to buy. We'll play through and see if we can get that 50% pullback, which we've just had here. We tapped in again. This was actually at the 200 moving average. So the way I like to trade this is I would enter as soon as we hit the 50%. And in this case, we could go for a target up here and target the previous wick. However, for this, I'm going to just target these highs and just keep it very simple with stop loss below this sort of support structure. And there we go. Take profit hit. So it's very, very simple. Again, as long as you're following the trend, there is absolutely no need for this to be overcomplicated. And as I'm sure you've noticed, that we are looking to get, you know, 1-to-1s, 1-to-2s, even 1-to-1.5s. We're not going for huge plays. We're using this to slowly compound and to just confirm entries. So again, you wouldn't want to just use this Fibonacci on its own. It's not strong enough to do that. It's just about pullback. So of course you need to pair it with other things, like I said, the trend, maybe another strategy. Just use it as that extra bit of confluence in the trades. So now what we've seen is we've had this moving average cross. So we're looking for sell positions now. So what we want to do is identify a high and a low, which I've not seen yet. So here's a potential high. So let's see if we can fit our fib in here. Not quite. So let's see. Okay, well, there we go. So let's go in for a short position. In this case, I'm going to have my stop at the previous high and take profit at the lows. And we can see how this pans out. And there we go. So we did have some drawdown. But again, because we just paired this with the 200 moving average, along with the fib, and you could also see the RSI was overbought. So again, pairing it with other things, we could see the trend was bearish. So this was a very, very nice trade. And, you know, all you need to do is just keep repeating the same process over and over and over. Okay, so now we're pulling back to the support. So let's see if we can get some type of 50% pullback right here. So you can see we just tapped it and we've had a rejection candle. So that's a nice sign. Again, we are still in an uptrend. The RSI is looking a bit oversold. So let's go and we'll have a little bit of a wider stop here. So again, we'll just be going for a 1 to 1.19 and we'll just play through. And there we go. So again, I know that this is, you know, replay mode, obviously. This is, you know, sort of cherry picked, I guess you could say, but this chart hasn't changed. I've just played it forwards and obviously I've sped it up, but it's nothing crazy. You know, this isn't revolutionary. It's not something you have never seen before. I'm just showing you this because the fib was something that was spoken about for quite a while, about a year, 2 years ago. And since then, it seems like not many people use it anymore. And it's not something that can just go obsolete. So within trends, you will often see pullbacks. That's how it works. You know, you move up, you have a little correction, you move up, you have a correction, and the same if you're moving to the downside. So all we're doing is just looking to catch these pullbacks. And when this is paired with something else, very, very powerful, and it can be very, very accurate. I mean, you can see here, it rejected this 0.5 level almost perfectly. It was maybe, what, 2 ticks away? So, you know, it's very, very strong. And we can mark this up with, you know, we've got the support here. So when you even add market structure, some other indicators, market drivers, economics, it's a very good confirmation or confluence tool. So I would urge you to go and back test this, go and test it. And if you want to know the details of the other strategy I mentioned, so the pullbacks using the RSI and the moving averages and some market structure, go and watch my previous video. That covers all of the other bits. So this is an add-on as an extra confluence that you can use. So thank you for watching. Make sure to subscribe and I shall see you later.